In today's video, we're going to be taking a look at an article written by Michael Donahue, A1 Trading's lead reporter, as well as taking a look at the Edge Finder and some currency charts related to today's news events. This article was published yesterday, October 11th, talking about 3 different news events relevant to today, October 12th. So let's get right into the news, and keep in mind that afterwards we will be taking a look at currency pairs affected by the news, both in the Edge Finder and the actual currency charts themselves. So, transpiring between 2 a.m. and 2 p.m. Eastern Time, the FOREX market will be subject to several bits of significant economic news today, Wednesday, October 12th. Because of these potential fundamental catalysts, there is a chance that financial markets will experience substantial volatility accordingly. Let's explore what this news could be and how it may influence price action as we exercise caution. 3 big catalysts today will be pulling no punches after all. Catalyst number 1, United Kingdom GDP. At 2 a.m. Eastern Time, the UK's Office for National Statistics will report any month-over-month change in the UK's gross domestic product, a key measurement in economic output. A change of exactly 0% is currently forecasted. If it is revealed that the UK's economy in fact grew, this could be bullish for GDP, perhaps making the cautious Bank of England more comfortable with rate hikes. However, if the real numbers indicate a contraction, GDP could plummet against other currencies, ushering in a return of recent instability. Catalyst number 2, United States PPI. At 8:30 Eastern Time, the U.S. Bureau of Labor Statistics will make public the month-over-month change in Producer Price Index, which measures changes in prices of goods and services sold. This is a mode of gauging inflation. An increase of 0.2% is currently expected. If the real numbers exceed expectations, this will be bullish for US dollar and feed into the Fed's hawkish narrative. However, if the report fails to meet this forecast, it could theoretically be bearish for US dollar, though it may take a lot of economic cooling for the Fed's aggression to be tempered. Catalyst number 3, United States FOMC. At 2 p.m. Eastern Time, the Federal Reserve will release the meeting minutes for the Federal Open Market Committee's latest meeting. While we do not have concrete numbers to work with as with the other potential catalysts, these documents are extremely important for market fundamentals since the FOMC is the portion of the Fed that sets monetary policy. If their minutes come across as hawkish, US dollar bullishness may likely continue, while an unexpected dovish change of tune could easily prompt a bout of USD bearish momentum. Now let's go ahead and take a look at GDP USD here in the Edge Finder. GDP USD currently sits at a -6 or a strong sell, with COT data information over here. US dollar sits at 77.71% long and 22.29% short, and the pound at 31.47% long and 68.53% short. Overall retail sentiment is 58% long and 42% short, giving us a neutral score for retail sentiment. Seasonality-wise, we have a score of -1, but we can see here in the month of October, historically speaking, moving into November and December, we actually see slight upward trends. Trend reading is -2, so that just means that this market is moving down respectively. And then we have some interesting numbers here in our fundamental section. GDP growth, inflation, unemployment, and interest rates all sit at scores of +1, -1, 0, and -1 respectively. And here are the numbers for our fundamental section. But I want to go ahead and look at the chart. We're looking at the daily chart here on TradingView. But I want to go ahead and look at the chart. So here is the GDP USD chart on the daily chart. We can see that for the whole year, essentially since January, and quite honestly even before that, this has been a strong sell, very, very bearish momentum for the entirety of the year for the most part. Little retests here and there, but mostly on a sharp downward trend. More recently speaking, we have had a little bit of retest here, creating some new highs here, but in the past couple days, going back down, and the edge finder considers it a strong sell still. Now we're going to take a look at USD JPY.
Are you interested in our market scanning software, the Edge Finder? You can try it today for free. Click the link in the description and fill out the form letting us know you're interested in the software. A member from our team will contact you with trial access information. The Edge Finder has brand new features like price forecast and economic news. There has never been a better time to try out the software for yourself. Click the link in the description and try it out for free today.
And USD JPY here in the Edge Finder is a buy bias with a score of +4. COT data sits at +2. We just saw the numbers for the institutional trader numbers for US dollar, 77.71% long again. And the yen, we see 19.89% long and 80.11% short. So heavily favored here on the US dollar. Retail traders are 25% long, 75% short, and giving us a score of +1 here overall for the pair. Seasonality, similarly to the last pair we looked at, GDP USD, we see slight upward trends moving into November, maybe a neutral, or honestly it looks like all-time average is slightly upwards with maybe a slight downward trend moving into the later months of the year. But in the last 5 years, we see downward trends. So the Edge Finder is considering it a buy at the moment. So this is subject to change, of course. But as of right now, it seems like in the months of October and leading into November, USD JPY could be a buy, especially with such strong US dollar strength. Let's take a look at USD JPY on the chart. Here we go. Look at that. That is a strong upward trend, very bullish momentum here all year for the pair. And we're just continuing to make higher highs. Every day, we're looking at the daily chart here. So this is a week ago today. We can see Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday. Just nothing but green candles as this continues to push forward. So again, we are considering this a buy as hopefully it continues to move forward. The last pair we're going to take a look at is Aussie US. And we're seeing sell scores here for Aussie US with a score of -5, COT data -2. Again, USD. We see the long percentage there. For the Aussie, we see 36.15% long and 63.85% short. So again, institutional traders are still heavily favoring the dollar. Retail traders agree, 74% long and 26% short gives us a score of -1 here. Seasonality, taking a look at the chart, historically speaking, we're seeing a kind of a neutral, maybe a slight upward trend historically speaking. And then in the last 5 years, a strong upward trend, but historically speaking, all-time average, we're seeing a slight downward trend. But nonetheless, moving into November should be a upward trend for the pair. GDP growth, inflation, unemployment, interest rates, we have scores of +1, +1, 0, and -1. And we can look at our fundamental numbers here. But let's go ahead and dive into the chart. So I've already got it pulled up here. And Aussie US throughout the year, again, we're looking at the daily chart, so I'm just taking a look at it. At an overall glance for the year, has been very up and down. We're seeing bullish momentum, and then back down, retest, and it goes back up. But over the past couple months, from August pretty much to now, we're seeing a sharp downward trend. Retested a little bit here couple weeks ago, but still on a downward trend. Could see a retest in the next couple days or weeks, and potential upside after that. But as of right now, it's looking like a downward trend for the pair. So those are 3 events happening today. surrounding the US dollar, along with their Edgefinder readings and some currency charts.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edgefinder, you can find that in the description as well. Thanks for watching.